Hi everybody, welcome back to Fire with Dr. Ninja Turtle. This is my end of July spending recap. July was all over the place. The spending was based on what happened in June, what happened in July, and what's coming up in August. So all these 3 months, a lot of money was spent. So let's get right into it. I wanted to show you my rental insurance that's quarterly. This $639 came out of my credit card. Normally, the money comes out of my rental income account, but I just have one property where it's quarterly on my credit card, so I wanted to show that. With lawn care, I only had one mowing this month, so therefore it was only $330 for lawn care. I did put $1,943.01 to the IRS, but I don't count it because this is a refund that I received from an overpayment in 2025, and I simply returned it to the IRS to pay on part of 2026. Let's keep going. I spent $101.78 on my RV. I had to fix some water issues, and that's what that cost. When I traveled to Palm Springs last weekend, I spent $169.43 in restaurants. Vacation gas, which includes gas that I spent to go to the airport in Florida, as well as on Ubers when I was in Palm Springs, all added up to $285.71. I spent $85.84 on gas here in town. This is not vacation spending. For my puppy, I spent $100. This is so that when I went to Palm Springs, my puppy could be in doggy daycare. My sanitation, which is the monthly garbage to the county, that's $20. My monthly internet is $72.95. And then I have one subscription, which is Adobe, which is $43.19. What I'm showing here is that I pulled out $40 in cash, but that was a line item that I showed where I spent on my puppy. I also pulled out $80 in cash that I've spent between here and Palm Springs over the weekend. What we see here is I spent $193.59 at Walmart. That's food. The total spent in July was $2,121.49. But on personal items, this is medical for my glucose monitor, my gas, and my food was $595.57. So for my personal monthly spending, it was $595.57, which is well below my $900 in personal spending that I have to spend each month. So I did come in below this month. So this was a good month. Now in June, I spent a total of $1,220.61. So in July, I spent more than I spent in June. But also in July, I went to Palm Springs and had a really nice weekend. Let's look at my spending on each one of my debts and see if I spent more than what I paid on my debts. For my credit card, I started the month with a balance of $6,040.18. I was charged $57.86 in interest, and I used on my credit card $1,397.32. I paid off $2,711.23, which left me with a balance of $4,784.13. So it's time that I tell you part of the story of all of the different things that have happened in July. I was planning on paying down more on my credit card because I had a rather high income in the month of July, which we'll get to a little bit later. But I found out in the month of July that I have a $5,000 bill coming up in August that I was not planning on. So I saved $1,400 that I would have put on the credit card to help pay and cash flow for August because my teaching income will be less in August than it is in July. Here is another story of what happened in July. I started my high pay, which is the line of credit where I pay $1,500 a month, and I also have an interest rate of 15.75%. So as you can see, I started the month with the balance of $22,510.76. This is the money that I borrowed from my line of credit to pay the IRS for 2025. The interest was $2,003.98. But as you can see, I not only made the minimum $1,500 payment, I also put $9,800 on that line of credit. The question is, where did I get the $9,800? Well, I had one of my rentals catch on fire this month. That's part of this whole story. What I found out from that, and I'll show a little bit later in this video, my 3 retirement accounts. When I went to find where I can get $10,000 for a deductible for my insurance on my rental property that caught fire, I found out that I can borrow money at 7.75% from one of my retirement accounts. There's no taxes, and that 7.75% comes directly back to me in my account. So why should I pay a bank 15.75% when I can pay myself 7.75%? So I decided to take $15,000 and pay down my 15.75% line of credit. And that's what I'm in the process of doing. So I've paid $9,800. I have another $4,900 or $5,000 to put on this to make it an even $15,000 that I'll be paying down, and that will show in the month of August. As I just mentioned, I borrowed from one of my retirement accounts, and I'll show you all 3 a little bit later. And I learned this only after my rental property caught on fire. I did not know that I could even do this before, but I learned that this month. So there's a $75 fee in order to borrow from the account. The minimum payment, which will come out in August, starts in August on the 15th, will be $300. Now, what I'm doing is I'm paying off a 15.75% line of credit, and I am only having payments going forward of $300 as opposed to the minimum $1,500 that I would have on that line of credit. Also, the 7.75% interest rate comes directly back to me. It does not go to a bank. So I borrowed $15,000, but because of the $75 processing fee, I only received $14,925. I should update you on the rental property and the fire as that goes along, but right now we don't have any news on what the insurance company will or will not cover on that fire. It may be a total loss, that property, we don't know. But that will be an update in the August video. Let's look at my other line of credit, and this will involve another story. I started the month with a balance of $25,405.18. However, I had to use $2,050 from that line of credit to pay the county to separate water from one of my rentals. The rental was on a well system, and I needed to put that rental on county water. Well, the county charges $2,050 to go under the road and bring the water over near where the rental property is. So I tried to cash flow that. I do not want to go into any more debt. So I tried to pay back that $2,050. But in total, I used $2,300 on that line of credit this month. My interest on that line of credit was $243.28. So I paid down $3,057.28. So I now have a lower balance because I'm trying to cash flow as much as possible, but all of these expenses are killing me between June, July, and August. So I ended the month with this line of credit lower at $24,891.18. And as you can see, I was making payments every time I got paid to try to pay back that $2,050. The last loan that we're going to look at that I'm paying off is a HELOC, where I started the month, and this is the one with the lowest interest rate of 6.25%. So I'm just paying the minimum on this one and paying extra on my other loans to try to pay those down first. This one started with a balance of $30,417.94. The interest was $182.30, and I paid the minimum payment of $304.18. So this one is now down to $30,296.06. Let's now look at the total that I have in payments. So let's look at the balances in total for all of my debts that I'm trying to pay off in July. I started with a total amount of $84,374.06. My ending balance for July is $71,386.11. This means that I paid down $12,987.95. But keep in mind, it's going to go back up in August by $15,000. So I actually only paid off about $3,000 in the month of July. $9,800 of that $12,000 is a loan that will be paid off starting in August. I also put $1,400 in savings to help me pay that $5,000 bill and not go deeper in debt in August. So all I have to come up with in August to pay that $5,000 bill is $3,600. And as you'll see, I'll get that from my teaching income. So let's keep going. Let's stop and take a side trip. What I did was I calculated how much my meal, I eat one dinner meal per day, how much that meal costs in the amount of money I spend on the food and how much it costs per serving. And so I have beans that I cook. They're dry beans, and I use broth, and I cook a big old pot of beans, which gives me 24 meals. I have fish that I buy from the store, and I get 10 meals out of that. The mixed vegetable bag that I buy has 25 servings. And so when I break each of those down by price, the total for one meal per day is $2.14. And you wonder why I can be so frugal with my spending. Now, let's all be honest. This does not count my peanuts and sunflower seeds that I snack on, so there's a little bit added cost here. And also, I buy Fiber One bars, and I eat one bar per day. So there is a little bit more if you talk about everything that I eat in a day. It is still less than $3 per day for everything that I eat. And you might be saying, how on earth does a person survive like this? I am just a healthy eater, and these are just the things that I do. I don't need anything else. Let's get back to my monthly finances. The balance at the end of June was $152,799.44. Now, this is in all three of my retirement accounts that I have at the colleges. But the total balance at the end of July is $137,201.91. That's a big decrease. And that's because we had a bad stock market and I borrowed $15,000 from one of my three retirement accounts, which I will pay back hopefully sooner rather than later, even though the minimum payment is $300 a month. So now let's get to my explanation of what I learned after the house caught on fire, because I was trying to come up with $10,000 for my deductible real quick. So I was calling around to say, which retirement account can I cash in? Which retirement account can I get money from? I had no clue that I could borrow money from a retirement account and not pay any taxes. So what I have is at College One, which is where I can borrow the money from, I cannot touch that traditional retirement account until I leave that college. So that money's locked up, except that I can borrow that money at 7.75%. And that's what I'm doing. And so with that particular college, I have $10,000 in their Roth, and I have $36,400 in the traditional account, which I am allowed to borrow from. I can also borrow 3 times from that $36,000 account. So I borrowed $15,000 for now to pay down this 15.75% loan to really lower my interest and lower my payments. Then I'm going to borrow more if I need it. I can borrow another $10,000 if I need it for insurance for the rental property. College 2, I have $41,600 that's in a Roth. I can pull that money from the Roth tax-free if I need to, but I really want to leave that money in there growing. College 3, I just finished working for College 3 in June. So I have access where I can cash in that $36,400, but that is traditional. And so I don't want to pay taxes on it because I would only end up with about $29,000. So what I'm doing is I'm borrowing money from one retirement account with no tax consequences at all. I don't want to cash in a traditional retirement account and pay taxes on the money. It increases my income for the year. I don't want to pull from my Roth because I want those tax-free dollars to keep growing. Once I pay off my debt, we're going into story time. Once I pay off my debt, I will start contributing again to the College Number 2's Roth account. I will also contribute to the $457 for College 1. I will build up the amount of money that I can borrow in the future, because I will not have access to that money until I quit teaching, and that could be quite a few years from now. Also, along with all of this, I looked at ChatGPT on my rentals because I was really exploring what other ways can I raise money in case I need it for this property that caught on fire. Well, I decided, based on ChatGPT, to sell my worst rental property. And so I'm in the process of selling that. I have a listing agreement with a friend of mine who's a realtor. And because of the appreciation of properties, that property should net me about $20,000 once I sell it. I also had an offer, and all of this will be updates coming in August. I also had an offer on an 8-unit apartment building that I have. I'm debating selling this 8-unit apartment building. We are still having it appraised, and we're trying to find out the value. And also, I have an appointment next Wednesday with my CPA to talk about the tax implications of the capital gains of me selling this 8-unit apartment building. But I'm definitely selling at least one rental property. The 8-unit apartment building comprises of 3 rental properties. It's a duplex and 2 triplexes. So that would be a total of selling 4 of my rental properties. Just so you have an idea of what all is going on, like I said, this is a fire hose this month. I always like to share my savings rate, which has been going down because I'm bringing income home from College 1 and College 2 in order to pay down debt. And I'm going to keep doing that whether I sell rental properties or I don't sell rental properties. If I sell rental properties and I make enough money to pay off all of my different loans and my debts, then I will start putting 100% of my teaching income back into their retirement accounts, which is what I was doing at the beginning of the year. So in July, I am down to a 20.38% savings rate, which is still pretty good. It's higher than most Americans have as a savings rate, but it's not as high as I want for a savings rate. You have seen that I have spent a lot of money in July, and that's because I had a higher income in July than I had in June. However, my rental properties really declined in July, they declined in June, and it was even worse in July. So I am basically bleeding money here with these rental properties, which is why I looked at what can I sell to get some of my equity out of all of these rental properties. So my income in July, which does not count the $1,943.01 that was a refund for the IRS. That money was given right back to the IRS. My pension, $923. My Social Security, $2,699. My teaching income, $6,422.43. That's the most that I've made this year because I had 2 sets of double classes. So it was a lot of good income from teaching. My rental income made 0 money. Last month it was minus $14, if you'll remember. This month I made just enough money to cover the mortgage and insurance, but I did not make enough money to pay myself a salary, which I'm supposed to be doing. I did not make enough money to put money to the side for property taxes. I had a really bad month in rental properties. I had a renter move out. We are evicting another renter. I am just having all kinds of issues. And then we had the house catch on fire. So it has just been a horrible, horrible month. However, I'm landing on my feet because I learned of other ways for me to move my money around, and I decided to start selling rental properties. Now, I'm not selling a large part of my portfolio, but I am selling enough to get me out of debt and to get me out of all of these financial burdens that have just come in June, July, and August. So without the refund, I had $10,044.43. I spent on me personally, again, my personal spending should always be $900 a month or less, was $595.57. So for me personally, I spent 5.9% of my total income. Some of it went because I went on vacation, but most of it went to pay down the debt so that I am not debting, so that I'm decreasing my debt. And that's my goal for the rest of the year. Do not increase my debt, decrease my debt. And I'm trying to do every smart move I can, which includes selling rental properties, to decrease my debt before this year is over and to pay off the IRS. So how do I come to end the month of July? I have paid down all my different loans, so I owe less at the end of July than I owed at the beginning of July. And that was with all of these punches that I took from rental property issues. So owning rental properties is not a straight line. However, what I've found is that my properties have appreciated quite a bit from the time that I bought them until now, even though ChatGPT showed that some of these rental properties are not cash flowing. And in retirement, I need cash flow. So that's where we're going in the month of August, September. We are going for more cash flow from the rental properties. So I'm going to end this video and say, never let your past determine your future.